All right, welcome everyone. Welcome to the Hurley Investments Market View Commentary for the 16th. It's a Tuesday. Again, I do need to apologize. Some of you were going, why wasn't yesterday? It was Martin Luther King Day. It was a holiday. And the update on GoToWebinar, for whatever reason, was supposed to shift it to today, and it looked like it did not. So we're low in numbers today. I do apologize. Tonight, we're going to call this Give Me an Update. Give me an update. And because we're so low in numbers, I'm not going to go over too much of the, we're not going to do a lesson today. I'll do a lesson next week, and that way we'll be ready to go. But okay, here we go. Give me an update. And here's the first one. Let's go with, how did you know? And we're going to start with Disney. And on Disney, we took off 95, 93 puts on the 12th. Some of you are like, Kevin, how did you know? Why did you take it off last Friday? And the question isn't necessarily how did we know, but if we took a quick look at Disney, Disney was trading in a range. And on Friday, it bounced off of the 200-day. Normally, when you have a bounce off the 200-day, you get some follow through. Pretty neat to be taking off the puts at around, boy, I would tell you around $89. We almost got it right at the lows, but pretty neat to take it off. And then on a day like today, we're like, okay, if it doesn't hold it, we need to get them back on. But of course, Disney today was up $2.70. So everyone that was in Disney had a $2.70 day. Yes, today, even though our market was down, got to get to where our market's at. Even though our market was down 0.37, Hurley Investments had an update today. But the update wasn't because of Disney. It certainly helped. But we took off the puts on 112 Friday because the 200-day simple moving average held. We could have been down today, in which case we would have added puts on immediately. Instead, today, man, that T key just doesn't work. Today, we were positive 2.70. So that's one of the reasons why on a market that was down 0. Well, actually, I should just give you the update, right? S&P down 0.37. Dow Jones Industrial Average down even worse, 0.62, and it's a percent. And the NASDAQ was down the least, which is funny because people just don't, they just don't know why we keep going to the NASDAQ. Why did we do it last year? Why did we do it this year? So, plain and simple, we took off puts on Friday and we were prepared to put them back on, but instead we got that big bounce off the 200-day. We probably will be looking to put puts back on Disney somewhere around the $95, $96 level. And all we're doing is just looking at where it's been to in the past. A high at 94.83, a high at 96.20. Those are lower highs, but we're probably going to be a little bit better as a run into earnings. Kevin, why is Disney doing so good? Its park numbers are going to be excellent over the holidays. And more importantly, They had a good run with Aquaman. So they had a film that put up some good numbers again. But that's what we did on Disney. We had a lot the last week. JP Morgan closed all the long calls for a profit and sold off shares the day of earnings. Now, it's pretty interesting, and I think I've got an article on it. In fact, I've got quite a few articles in here for you. Their profit took a hit after they're paying a $2.9 billion fee tied to the government seizures of failed regional banks last year. So I don't know what that fee was for. But if you took it out, they beat top and bottom. They still beat the bottom line with revenue anyway. And please read the article, but they're heading the wrong direction. So we exited JP Morgan. Kevin, why? Why are you exiting JP Morgan? They're pretty much fully valued. Our expectation is they're going to come back down to that 158, and then we'll play the buy-in again. But they ran too far, too fast, and they became fully valued for last year. They're not fully valued for this year, but they're close. And if they're only going to get up to like 190, it's not something that we're looking at as a nice profit maker for us for this year. So we stepped out of JP Morgan, doing so at a profit across the board. Double puts on Boeing, and Boeing has 245 and 205. Baidu, 118 and 110. A great understanding of how we were profitable today with the market down almost a fourth of 1%. Baidu, we have not lost a penny since the 118. In fact, today we made more on the way down than Baidu lost, having twice as many puts. Same thing with Boeing. We only have a few people in Boeing. It's kind of neat because we know where they can get to, back up to 260. We're looking for a base on Boeing, and we'll add some leap calls on them again, as long as they can get their crap together and get themselves moving forward. But for Boeing and Baidu, we've made more money on the way down from 245 down to 200 on Boeing. From Baidu, from 118 down to 104 and a half. Baidu will probably stop at 100. The question with these two, when do you take these profits? So the answer is a big up day, and we take off the higher, more profitable puts. So that's what we're trying to do. The one with the huge cash in it, we're going to take those puts off. We'll leave those other ones on, maybe to get ourselves through earnings. If there's a technical reason, maybe we'll take them all off. But if you're looking at Boeing, Boeing is oversold, and we will probably not take it off because it can stay oversold for a while. Broke the 200-day. We are probably going to the 190s on Boeing. Could be the low 180s, the 182.50, but we see a little bit of support at 190. From 267 down to 190, anytime you lose a third of the value, you're looking to get some positions in play to make some money on a bounce higher. If we take a look at Baidu, I said 100 is probably going to be 103. 103, we might take positions off and look for a bounce higher. Last time it hit 103, went up to 112, 111, 114, and then continued on to 126. But that's where we'll be looking to take some off, possibly add some more shares so that we make those puts or that downward movement worthwhile. So pretty interesting to know that we're doing okay there. With that said, Apple puts are at 195. Under Armour puts are at $8. We have Bank of America puts on at $34. Another reason why we were up today, Micron up $2.22. Buck the market. Pretty neat to see that. Another good thing to see, Under Armour, primarily being hit because of Nike, just hit below to its $7.41 range. We've had it protected at $9.50, at $9, at $8. We're probably looking to see this one run down to $6.50 again. What a great opportunity to play the bounce. This is why we're so excited for this year. There's a lot of the positions that we play that was not part of the Mag 7, the Magnificent 7 last year. Yes, last year we did okay with Apple and Meta, but they ran 70, 78, I don't remember exactly, 70% plus of the S&P 500 gains. We've got a lot of positions that have huge upside potential, and this is why we're excited for what we're seeing this year. I've got a bunch of different things to tell you. Something to remember, Q4 earnings bar is low, but valuation hurdle is high. As I went through last week and went through valuations, and as we calculated some of these, how would you say this? A lot of these stocks are fully valued. And when they're fully valued, hedge funds look for better and bigger opportunity. So your institutional traders are going to, you're going to see them move out of fully valued stocks into other opportunities. Doesn't mean that they're not going to come back, but it's just something to understand. The banks didn't do very well with interest rates going higher. They haven't done very well with interest rates going lower either. So it's just something to remember. The stock market's road has paved with good intentions. There's a good inflation outlook, there's a good economic outlook, and there's a great policy outlook in the market's mind that includes 6 rate cuts by the end of 2024. That probably will not happen. So that's what we're looking for when people are saying, hey, little exuberance, a little over excitement in the market, a little ridiculousness about where our market's going to go. 6 rate cuts, not in the cards. 2, maybe 3, but one's a 0.5 percentage point, then that's where we're going to be able to go. So just something to keep in mind and where we're going to be at. All righty, here we go. Looking at markets this week, I think they're going to go lower. Right now, the Dow Jones Industrial Average is bullish, but we're getting technical crossovers heading to the lower side. Not quite on the RSI, not quite on a 5 or 20 or 15 and a 30 day, but we do have them on the MACD. Could be a precursor, still technically bullish, but we don't know. The S&P 500, it looks a lot the same. Looks like we are crossed over on the MACD down here, but not quite crossed over on the RSI or the 5 and the 20, the 15 and the 30, whatever moving average you use. It should not be crossed over, so we still have an opportunity here. NASDAQ looks much the same as the S&P. All three are bullish, but my expectation is that we're going to come back down and touch that 50-day. We moved too far too fast. We've moved too far too fast when you have all of this in between. You usually come down and touch and then move in a jagged rate up and down. Too far too fast, and we're looking to see things come back to the median. All right. Where do you think we're going to end January? I'm still going to be a little positive, and I'm probably a little overly optimistic right now, but I want to shave a little bit off. I'm going to go down to that 2.5%, knowing we'll have earnings, and our earnings will come up soon. Earnings for this week, it's a second run on banks. Goldman Sachs, Morgan Stanley today. Plain and simple, our earnings season starts on Wednesday. So I will have a list of our earning dates on here for you before I publish this, so that you guys will have that opportunity to see what we trade when earnings come up. We had a holiday. Retail sales tomorrow will move us in one direction or the other. Because it's going on December's sales, excuse me, I would expect that to be a positive, and we'll see a little bit of a boost on our futures. But capitalization, our housing market index, the industrial production, all those are expected to be lower. Industrial production to be down 0.1. Capitalization down to a 78.8. The NAB housing market's going to be down at a 38. So the expectation is that obviously after we had this boost in our economy and manufacturing running up to Christmas, now will be a bit of a reboot cycle. Housing starts building permits on Thursday going to be low. Philly Fed, expect that to be low. The Empire sales manufacturing number today was supposed to be down negative 4.0. It was down negative 43.7. Manufacturing looks scary bad. Ridiculously scary bad. Just something to be paying attention to, something that you'll want to watch. Okay. One of the Fed governors, Bowman, rate hikes will happen over the year, but not as quickly as we think. I would not expect a rate hike in March. We're definitely not getting one on the 31st of January. So just read through this so you understand the rate hikes. For those of you that are watching Boeing and want to know what's happening, great article on Boeing, not necessarily their fault, but why not blame Boeing? They're always fun to blame. JP Morgan. Profit falls. If you want to know why we're at JP Morgan, here's what you're looking at, and here's the problem. Nice that they were up on the day that we got out of them. Bank of America. What happened in Bank of America? It's no longer about the billions of dollars in these low-term bonds that they piled into. There's a new problem. Make sure you read through it if you want to find out what's going on. But it's really just, it's easy. It's consumer banking. A lot of people asked, hey, why are we getting out of biotech and pharma? I put a little bit in here because this is an example of what ADCs are and how they're using drugs that are changing or specifically targeting cells that are bad. There are three that are working on this, primarily Gilead, Pfizer, and Merck. Pfizer is probably the lower part of these. So just pay attention to it. Hertz, agile decision to shift strategy and sell EVs. people are coming to understand that for the most part, the EVs is not saving money. They are too expensive to fix. They are too expensive for their batteries. There is very little demand because people, for the most part, aren't going just around a city. In my neighborhood, I know 4 people that have gotten rid of theirs, and one of them was I thought it was the Porsche version, which is a little shocking. But a shift is going from electronic vehicles to hybrids again. And let's face it, some of what the current administration put in will end up being repealed by the next president because the economies of scale are not fitting in with, hey, by 3030 or by 2030, 80% need to be electronic vehicles. It's just not going to happen. We don't have the infrastructure for it. I found this one interesting. The big 3, China, India, and the US. Well, China was going to overtake us by 2025, be the world's largest economy. Now that's pushed out to 2037. Read the article. China is well ahead of India. China is not close to the United States. We still hold the stranglehold on the world's leading economy, and we will for some time into the future. But read the article to understand why we want to be invested in China to a certain degree. Inflation. Local article on inflation, talking about what's going up. Ham and eggs. What's falling? Potatoes. Please read through this. I found it very interesting to see what we're buying for food that's going up and what's going down. So just things to pay attention to. I found the article interesting. I also have a rather long article, 12 stocks that corporate insiders are abandoning. So just something that I found very interesting. Part of it because there are a couple of stocks that I spoke with some of you on. The CME Group is one. Jabil. I don't know, Teladoc Health. Unity Software is one that we spoke with recently here. Neurocrine Biosciences, I don't know that one. O'Reilly Automotive, interesting one. Huge sellers of inside sales on that one. Procter & Gamble. This is supposed to be one of those stalwarts, these bellwethers. A lot selling out of Procter & Gamble. I don't know Planthier Technologies, Regeneron Pharmaceuticals, that doesn't surprise me. Signet Jewelers, that one doesn't surprise me either, but I don't trade it. Sun Country Airlines, I do not know that one. Scalar, wow, this is a big one that was just in last week's article. Scalar's one where no faith on the management side. It got up in price and $50 million worth of their own stock was sold by their insider trading. Their directors, their CEOs and so forth, major shareholders. Here you go. So pretty interesting to pay attention to some of these. Gartner, another one I'm a little surprised on. But if any of those are yours, you definitely do want to be getting out of them. With that said, any questions you guys have for me tonight? So good question. So the short answer, or the question was, when are you going to have puts in place for earnings? And the correct answer there is it depends. We will roll in the money puts down to at the money to take those profits. we will take off double puts for profits, because if you have double puts, you can't make anything as it goes back up. So you don't want to hold on to twice the amount of puts if things are going to go back up. That just doesn't help you. And really, that's the short and the skinny of it. So it's on the fly. Keith and I are watching every single day, and I don't know if I told you this. So we're watching it every single day, and we're making sure that we are doing the best we can to make you guys as much money as possible. With that said, we did a day trade. If you owned Apple, we did an arbitrage by buying Boeing puts and selling them off for a 15% one-day return. So for every 100 shares of Apple that you owned, we made you roughly $125 on those per 100 shares of Apple. Pretty unique. Keith came to me and says, hey, we can do an arbitrage. And I was like, hey, let's get it done. Let's make it happen. And he was brave enough to say, okay, and went to work on getting the trade put on. And it was amazing because literally 30 minutes later, it filled at $1.25 profit. Kevin, that's more than 15%. If you take, I can get my calculator. If you take $1.25 and divide it by $8.20, that's 15.24% return. Pretty amazing. So that we're able to get in touch and get that to work for us. With that said, anyone that owned Apple, we did an arbitrage trade, and we thought, hey, why not use our Apple grouping and see if we can't make some money on the downward slope of Boeing? Another reason why we were up today in a down market. Market was down about 0.37. We were up 0.41. Beat the market today on just paying attention to what's happening. Pretty fun and pretty amazing to get to do something like that. Any other questions? If there aren't, then we're going to call it a day. You guys have a wonderful week. I will see you next Monday. Take care, and I'll see everyone then. Bye-bye.